All right, everybody. Welcome back to Financial Friends. We have to talk about something pretty important, something that's been on my mind recently. We need to talk about why people think it's a bad idea to purchase stocks when the price goes down, and why sometimes they even sell it, and why that's not a good idea. So, without further ado, let's get into this topic. Let's go ahead and talk about this. Nothing's wrong. I'm not sad, okay? But there's a point that needs to be proven here, and I want to talk about this. And I think I have a pretty good analogy to kind of explain everything to all of you here. If you're from public, well, you've heard this analogy. I'm going to touch on a couple different points, but let's go ahead and dive right into it. So imagine you walk into a store. And there's 3 t-shirts. You walk into a store and one day you purchase this absolutely fantastic t-shirt for $50. The next day you go in and you see that t-shirt is $45. So you get a second one. Why not, right? It's $5 cheaper. You really liked the first one. It's a perfect shirt. The third day you go in, you buy it. You now have 3 t-shirts. You bought it again. It's only $35. It's $15 cheaper than it was the first time. It's the same shirt, the same quality, the same everything. Why is this any different than purchasing a stock that you love, that's great, that is a good business, and you just buy it for cheaper, like Microsoft? Back in December of 2021, at one point, Microsoft was $341. If you were buying the company then, if you liked the business and the stock then how come you would stop purchasing in February when it's $310? Or why would you stop purchasing it in March of 2022 when it's $280? If it's the same thing, if it's the same exact thing, why stop buying it? Why sell it? Why sell it at a cheap price? I'm just asking the questions, right? November, December, and January, obviously, of 2021, and January of 2022. Google was $3,014 per share. In December, it was $2,928. And in January, it was $2,534. If you were buying the stock in October, November, December, why would you stop buying it in January? You're getting a better deal on the same exact item, Google stock. Okay, so let's take a look. Let's flash forward a little bit. March, $280, in January, $254. So you stop buying both of these positions. You're scared. You don't want to do it anymore. You stop buying. Well, today, Microsoft's $299. Again, that's compared to the $280. And Google is $2,770 compared to this $2,534. So they cost more, essentially, right? The price has appreciated, the price has went up. So if you bought just in those last months of each, you would be up today. Now, if you were buying when it was a little bit more expensive, then no, you would not be up in your position today. But if you kept buying and you were consistently buying the company, regardless of its price, because it's the same company and it has not fundamentally changed, you'd be in a much better spot than if you stopped buying as price went down. Here's a graph I want to show you. Obviously a little cartoonish, a little blurry, but funny, okay? You assume the most risk when you're buying a stock at its highest price, yet for some reason, it's human nature to feel the best then about that decision. And at its lowest, you actually have the lowest amount of risk. I won't necessarily say that for sure because the price could still continue to go down, but looking back, right, in the past, you actually assumed the most earning potential and essentially the lowest amount of financial risk by purchasing a stock lower in its overall curve or at a cheaper price. Again, I want to emphasize, if it's hitting in somewhere in this area and you're buying the company and something has fundamentally changed or does fundamentally change and the stock continues to drop, then obviously you still assume risk at that point. But hindsight being 2020, you would have still assumed more risk buying here than you would have buying when there's desperation and panic. This is, well, essentially dollar cost averaging. Now, this graph is from a cryptocurrency company, but it's the same exact thing. If you make a lump sum investment at the beginning, aka you purchase the stock at the very peak, right, or the top, and you put all your money in at once, you're going to assume a higher average cost than you would if you put $100 in, buying it low, buying it high, and especially buying it at its lowest point, right? You're going to assume a lot of upside because you're purchasing the same stock, and that's the stressor of this video, the same product, the same thing at a cheaper price. Just like a t-shirt. It's the same t-shirt as on day 1 and it is on day 3. On day 3, it's just on sale. It just costs less. Now, there's one big thing that I do need to stress. One big thing. If the product is different, if it is no longer the same t-shirt, if there's a bunch of stains on it, if it was returned, or if it was a completely different t-shirt altogether, the principle breaks apart. Okay, and that's the big stress here. If the product isn't the same, everything that I've just said goes out the window. Why is that? Well, let's take Apple, for example. If Tim Cook left Apple, the company would be fundamentally different, especially if he was replaced by a person who was not as good of a leader as him, who didn't lead the company or have the same vision for the business as he did. If Apple got into a lawsuit and decided to deplete all of their cash and fundamentally change their big cash balance sheet over 20 years, well, then the company is a little different. It's not quite the same. Its financials have now fallen apart a little bit. If they can no longer produce M1 chips, which are core in a lot of their products, well, again, the company is fundamentally different now. There's a bigger issue at hand. If they halt laptop production, if iPhones get banned in the US, Apple is no longer operating on the same grounds. It's fundamentally different. Or I have down here just for fun, if they decided to only make cars and they went away from iPhones and iPads and watches and headphones altogether, well then again, the business is fundamentally different. And that word fundamentally means, well, the fundamentals of everything is different. Like in basketball, if they just took away the 3-point line altogether and they decided that field goals were no longer worth 2 points, they're worth 1. Well, the game is now fundamentally different. It's changed. The way that people approach and play is different. People wouldn't shoot from really far away. They would just drive the basket every single time. Why would you shoot from far away? Fundamentally different. And this could be financially, this could be the sector they're in, the business they're in, the management, the way they operate, any of it. If it's fundamentally different, then this principle of purchasing a stock at a better value, it changes because there's maybe a reason for that price, the reason for the price drop. Now, if there's just panic, right, and fear and doubt, well, buy that sucker up. You might as well take advantage of a fire sale. So that is this video. That is what we had to talk about. Leave your thoughts down below. Does this change what you think? Are you now going to look at a company for what it truly is, what it truly does, and what it can do in the future, and make better and conscious decisions on when the price drops to purchase more of that company because you know that long term that business is going to be perfectly fine? All of this does obviously work much, much better with, a long-term mindset. However, it could be kind of used, in the short term, maybe within a year or so. If there's a lot of fear and uncertainty and doubt in the markets, and so everything's price is going back down, well, in a year or two, prices might recover if the economic climate or fear or uncertainty or doubt changes, and therefore you might be able to, make a quick buck. But I'm not recommending you do anything. I'm not a financial advisor. This is just Financial Friends, where we talk about everything that has to do with finance. Leave your thoughts in the comments. Thank you very much. I appreciate you all watching this video. Leave a like if you enjoyed, and I will see you all in the next one. Take care.